Welcome, everybody. Welcome to another episode of Moving Markets. My name is Jeffry Dunyon, owner and founder of Safe Option Strategies. I just finished a few minutes ago a live weekly class that I do with my Safe Option Strategy students. We had some fantastic conversation about what is going on and the trades that we're following and what we're doing. Let me start. It's almost 10 o'clock my time, meaning it's almost noon on the East Coast. Let's talk about what in fact is moving the markets today. That's the name of the program, so we'll focus there. Before I get off onto something about politics or sports or family or whatever, let's first jump right into what's moving the markets. So this morning at the open, futures were pointed down pretty dramatically on the Dow Jones Industrial Average, but futures were up on the S&P and the NASDAQ. It's not a real common thing that futures point down on the S&P and up on the Dow or vice versa. Those two indexes are usually pointing and trading in the same direction. But you got to remember that the Dow is comprised of only 30 companies. And there's a couple of those companies that are very heavily weighted. For those who may not, I won't turn this into any kind of a lecture, but for those who may not know exactly how this works, let me explain really quickly. Each of the companies that trade, I'm going to turn and look at my other screen a little bit here. I might have to rearrange these computers so when I'm looking at this other screen, I'm not turned as far away as I am. I don't have the greatest profile thing going on there, so I like to look more straight at the camera. But anyway, in the Dow, you've got 30 companies that on the low end, they range in price from, I think, at $45 a share. At $41 a share, Pfizer may be the lowest price company in the Dow. And at 45, Coca-Cola is close behind it. And then at close to $400, Boeing is the most expensive company in the Dow. I think the second most expensive company is it United Healthcare, or 3M is trading at $205 a share. Goldman Sachs, $200. And yeah, United Healthcare, $239. So those are your three or four largest. So what happens with the Dow is those companies that trade at a higher price per share have a larger effect on what the index is doing. Assume you had one share each of every one of the 30 stocks that are in that make up the Dow Jones Industrial Average. Your value of your account would go up or down very proportionate to what the most valuable stock was doing, up or down. If a company like Boeing was up $45 a share and all the rest of the Dow components were down, but the cumulative total in terms of dollar value was not greater than what Boeing was, then your portfolio would still be up on the day. And the same is true in reverse. So the Dow can have an occasional day that is very anomalous. It can be very off. And that's what we've got going on today. Right now, today, of the 30, at noon Eastern time, which means it's 9 o'clock on the West Coast, and you can do the math for if you're in between. We've got Boeing is trading down $30 a share, and at $30 a share down, Boeing is responsible for potentially a 200-point move to the downside on the Dow Jones Industrial Average. If everything else was even, that alone would have the Dow down 200 points. But as we speak right now, the Dow is up about 100 points a share because every other stock that makes up the Dow 30 stocks is trading to the upside, with Apple and 3M and Goldman Sachs, three of your larger ones, leading the way at 3%, 2.5%, and 1.25% respectively. So they're managing those companies, along with all the rest. 29 of the 30 Dow components are trading to the upside, and it's offsetting Boeing. If Boeing were trading flat right now, dead flat, instead of down as far as it is, the Dow Jones would be up over 300 points a share right now. So when you put that kind of perspective in place, you look at what's going on, you're saying, this is a great day in the market. This is a really positive day in the market. So let me start by talking about what's going on with Boeing. In Ethiopia, I can't remember now where the flight originated from, but it's an Ethiopian Airlines flight, a Boeing 737 MAX, which is one of their, I think it is the model airplane in Boeing that they make the most of. So it's not their most expensive airplane, but it's the one that they make more of than any other airplane in their fleet. And it's the second one of that airplane that has gone down in a tragic accident that killed a lot of people in just a 4 or 5 month period of time. I don't remember exactly when the other one was, but it was the same style aircraft that went down. Now, as of right now, today, as of this moment in time, no one has made a determination whether it was a mechanical fault on the airplane. If there was some part on the airplane that malfunctioned, we don't know that yet. The flight. I'm not making any accusations. I don't even want to speculate. I'm just saying we don't know. It could have been a weather anomaly that took the plane down. I don't think that's the case. It doesn't look like that right now, but we don't know. It could be. It could have been a pilot error. I hope that's not the case. I'm not throwing out an accusation towards the pilot or co-pilot or anyone else. I'm saying we don't know, and it could be a pilot error. It could have been a malfunction on the airplane. The investment community at large is treating the downing of this, they're treating this airplane crash as though it is a mechanical failure because Boeing is selling off. It's selling off at a fairly high volume of shares that are traded, and certainly it's down 7% right now. Early in the day, Boeing was down over 12%. It's come back a long way from how far it was down, but it's still trading down quite a heavy percent. I'm going to tell you two things about the sell-off of Boeing stock. Number one, it's a premature reaction. In other words, until we know now, if there is a problem mechanically with this aircraft and it's systemic, meaning all of the aircraft are subject to having this same mechanical problem, then it's justifiable for the stock to sell off, and Boeing might take another hit and sell off even more in the coming weeks. If it's not determined that this is a mechanical problem, or even if it's a mechanical problem, but it is definitively concluded that it is a fluke situation with this aircraft, not something that is systemic, not something that is system-wide or taking place through all the aircraft of this model or even wider scale Boeing at large, then not only is the sell-off premature, but it's unnecessary. It's a sell-off that is completely unjustified. It is what it is. It's happening whether we want it to happen or not. But it's very unfair that Boeing is getting hit right now today with this sell-off, because we may discover that Boeing is absolutely fine and there was no fault on the part of the company. And if we find that information out, Boeing's going to skyrocket back up. I think it's early to suggest that Boeing at $393 a share is a buy opportunity. I would wait and let the dust settle a little bit. But I'll tell you, if it's determined that this was not the fault of Boeing or not the fault of the aircraft, but something else caused this plane to go down, Boeing is going to be a phenomenal buy opportunity. They're going to get back up their recent all-time highs. It's not just their recent highs, it's their all-time highs. Boeing, not very long ago, was trading at, they got to a high about a week and a half ago. They got to a high of $446 a share. 446.01 is what they got to a high of before last week's sell. Last week we had the 5 days in a row of sell off. But today's move down is on massive volume. Boeing on average trades in the neighborhood of 4.5 million shares per day. They have already traded over 24 million shares today at the moment in time that I'm doing this presentation. Or excuse me, I 22 million shares they've already traded. It's a big sell-off, and then it's not something to be taken lightly. But in spite of that, the Dow's having a great day. The NASDAQ is having a phenomenal day, up 1.75%, and the S&P up almost 1.25%. So a big rebound from last week. The reason everything else is up, and the reason the Dow is up in spite of Boeing being such a drag on it today, is largely due to two factors. Number one, Jerome Powell did an interview on 60 Minutes last night. Now, if you've listened to any one of my presentations, you know my politics. I can't do these presentations without injecting some politics into it. Not because I want this to be a political show. It's because politics drives the market so often. It's almost impossible to make a complete separation of the two. So we talk a lot of politics in this presentation. If you've listened to this, you know where my politics are. But politics aside, Jerome Powell had an interview on 60 Minutes last night that aired, and 60 Minutes, in my opinion, 60 Minutes tried really hard to make it political. Now, that's okay in the sense that the economy and the Fed are tied in politically, but it's almost like the 60-minute interviewer was trying to have a gotcha interview where he could get Jay Powell to say something really negative about the administration, or to confess that the only reason the markets aren't 3 times higher than they are and every human being on planet Earth has a job is all because of the Trump administration. I kind of felt like that's what the interviewer was doing. But to his credit, I beat up so much on Jay Powell a month ago, and 2 months ago and 3 months ago. I was hammering Jay Powell. To his credit, he has come around, and I think Jay Powell has grown up very quickly in terms of his public speaking. I've never doubted that Jerome Powell. Sorry, Jerome. I've never questioned that Jerome Powell is a smart guy. Dumb people get elected politically, but dumb people don't get into positions like Jay Powell is in. It doesn't mean they can't do or say dumb things. And one of the problems we've had with Fed chairs since Alan Greenspan. Now look, I don't, if you love him or hate him, I don't care what you think about Alan Greenspan. I'll tell you one thing that Alan Greenspan was brilliant at. He was brilliant at manipulating the press. He was brilliant at manipulating interviewers, and his public commentary never told you anything. Alan Greenspan could talk for an hour answering questions that were asked to him, and you had no idea what Alan Greenspan was thinking. You had no idea what his plans are. You had no idea what the Fed's next move was going to be. The guy could talk forever and not say anything at all. I think that was good for the Fed to do that. Ben Bernanke came along and said, we want to be much more transparent. And every time he opened his mouth, it felt to me like he stepped in it. Ben Bernanke shared too much information about what the Fed was thinking about doing. And it's not a question of transparency. It's not a question of the Fed hiding what their plans are. It's the question of the average person that hears what the Fed is going to do, not understanding it and overreacting, often in a negative way, to what the Fed was planning on doing. That's why I liked Greenspan, because people couldn't react one way or the other based on what Greenspan said. And that's what I loved about Alan Greenspan. Then Janet Yellen came along, and I don't know. With Janet Yellen, it was less a matter of her talking and you not knowing what she said. It was more a matter of half of what she said was nonsensical. She would say what the Fed was going to do, kind of in the Bernanke mold, and then she would muddle the waters by confusing you as to why they were going to do it. And you'd come away from a Janet Yellen press conference saying, what the hell did she just say? What is she talking about? I get that she says they've got to start raising interest rates. I don't get her rationale at all for why. It doesn't make any sense. So now you get Jerome Powell comes along. And the first couple of times Jerome Powell spoke publicly, I think he stepped in it. He scared investors. He freaked out the markets. He made hawkish commentary that didn't need to be made. Everyone was expecting interest rate hikes when I keep wanting to say Jay Powell, when Jerome Powell made interest rate hikes, when the Fed decided to make interest rate hikes throughout the 2018 calendar year, it was expected. The market wasn't reacting as much to the interest rate hikes. The market was reacting to the comments from Jerome Powell saying, we're going to have to do this 5 more times in the next year. We're going to have to do this, at least 4 more times in the next year. And we've got to be more aggressive in clearing our balance sheet. And people freaked out about that. Well, to his credit, and I've become a Jerome Powell fan over his last few interviews and his last few comments, because he's much more measured. I think he's transparent in saying but he's a little more, and I think this is appropriate for the Fed. He's a little more elusive in what he's telling you is going to go on. People are thinking right now that we're not going to get any interest rate hikes in 2019, and that may be true. But we may end up with one, and I think Powell has gotten to the point where he's going to soften the blow if we get one, in a way that it's not going to freak out the markets and we're not going to be trading horribly to the downside. So one of the things pushing the markets up today is that 60-minute interview by Jerome Powell that aired last night. He said the economy was strong. He quelled the fears of going into a recession during this calendar year. He talked about good GDP growth. He talked about good job numbers. He talked about low unemployment numbers. Everything Jerome Powell put out there was positive in terms of the economy, and the markets are reacting to that. There's a second catalyst event that happened, whether I don't know exactly when the news broke, if it was late last night or if it happened this morning early. Some comments came out from the administration about the trade talks with China. And what was specifically stated was that in principle, we have reached a deal with China on their currency manipulation. And that's not, the wording wasn't currency manipulation, but one of the things that China has done over the years, and this is one of the reasons why these trade negotiations and quite honestly, this trade war has been a necessary thing. One of the reasons for it, we've talked about intellectual property theft. We've talked about forced technology forfeiture. We've talked about massive trade deficits and tariffs that are unfair. What we haven't talked a lot about, and it's just one of many prongs that are involved in this multi-prong negotiation, is that China has a history of manipulating its currency. When it works in China's favor, they will devalue, I think they call it the yuan, and I forgive me if I pronounce that right, the Chinese dollar, basically. They will purposely devalue it so that it is more advantageous for foreign countries to spend money in China than for Chinese companies and Chinese individuals to spend money in the US or in other foreign countries. And according to the World Bank, according to some world trade laws, it's illegal for countries to manipulate their own currency. They purposely print more money or to bring the value per dollar or per yuan down. And that's not a fair way to treat the rest of the international community when it comes to trade. So it's a big deal. We've still got to get intellectual property theft worked out. We've still got to get things worked out with the forced technology forfeiture, where a company has a certain technology that they have under patent, and before China even decides to steal the intellectual property, they say, if you want to do business with a Chinese company, you're going to have to give up your technology. You're going to have to share it with us and let us profit in it as well. Instead of just profiting from a manufacturing side of things, China wants to profit in the technology as well. So companies force the US companies to give up their technology. And then if they, in other situations, they steal the intellectual property. So, and those two things are still sticking points. They still have to get addressed. I worry a little bit that I don't disagree in principle with Donald Trump's attitude that we'd rather walk away and not get a deal than get a bad deal. I think that's appropriate. I think that's correct. We may have to settle for a middle of the road deal. If this is our idea of a perfect deal and this is China's idea of a perfect deal, we're going to end up somewhere in the middle. And if we're a little closer to our side, a little closer to their side, I can live with that. What we can't do is say, here's the perfect deal for us, but this perfect deal for them is the worst possible deal for us. We can't come down here and do that worst possible deal for us. So walking away from a bad deal instead of capitulating, in my opinion, would be better. But I'm optimistic and very hopeful that we are going to get a deal put together with China. It's not going to be the perfect deal. I guarantee when we finalize a deal with China, you're going to have the anti-Trump group is going to rail on that deal no matter what it is. Listen, the reality is this, and disagree with me if you want to, but if you have any unemotional logic in your body, if anywhere in your brain, anywhere in your body, you have some emotionally detached logic, you know what I'm about to say is absolutely true. Donald Trump himself could find a cure for cancer, a cure for the flu virus, a cure for every physical ailment that exists. He could be in a laboratory and be the one who discovers a cure, and he will get ripped apart by a certain percentage of the society that he did it the wrong way, that he used the wrong tools to get there, that he didn't do it fast enough. There are enough people that just hate the man so severely that they'll rationalize overlooking any accomplishment he makes, any achievement he makes. When this trade deal gets done, and I believe it will get done, I'm saying when instead of if, when this trade deal gets done, no matter how good the deal is, you're going to have a certain number of people rip it to pieces. And a lot of those people exist in the mainstream media. A lot of them exist at MSNBC, at NBC, ABC, CBS, CNN. That's where a lot of these people who you'll hear from exist, is in the mainstream media. No matter how good the deal is, they're going to rip it to pieces. I will be objective and say, here's what I like about the deal. Here's what I don't like about the deal. And I think there are a lot of fair-minded people that will be objective about it. We've got to get some kind of a deal with them. And if it's not the perfect deal, but it's better than what we have in place, I'm going to be overall happy with it. So we'll see what ultimately happens. Last little bit, I've got a few followers now that follow me on Twitter and Facebook, and they watch my YouTube live channel. And some of them are my students and some of them aren't, but they actually, I've had a couple of them say, what are you going to tell us about AOC today? It almost seems like we can't go a day without some comment on AOC. Alexandria Ocasio-Cortez, over the weekend at some conference she's attending, South by Southwest, I think is the name of the conference. She said that jobs that disappear because of automation, you should be happy about that. You should be happy about jobs that disappear because of automation. So, here's my 2 cents on her latest idiotic, moronic, stupid, unthoughtful, illogical comments. I wish we would focus a little more on the people around her, because here's the thing I'm going to say about her. I don't think she's bright enough to come up with any of this stuff on her own. I think she's got people around her that honestly believe they're the smartest people in the world, that keep feeding her these lines, and they really believe it, or they know that they've got a puppet in her, that she's the pretty face that will go on camera and say it. And these are some messed up people. These are some people that just they're without common sense. They're without logic, and in most cases, they're completely void of factual information. The reason AOC says you should like it if you lose your job to automation is because she's proposing a mandatory government wage for people who don't have a job, for people who don't want to work. She's saying we should give a paycheck to people who aren't working. We're not talking about an unemployment check when you've paid into unemployment through your deductions in your paycheck, and now you're getting a little bit back. We're not talking about that. We're talking about people who don't want to work. We should give them a minimum living wage just out of the goodness of our heart, and because we don't give a rip where that money's coming from. We don't care if the money's there or not. Let's just give everybody that. Sure, if your job is replaced by automation and the government's just going to replace your income as well, of course you'd be happy for it. What would have made a lot more sense, and this is just where the lack of common sense is so prevalent and so obvious, is to say you could be happy for the advancement of technology if you have the ability to look for a different job. If your job disappears because of automation, get some training, get back into school, look for the new jobs that are going to go crazy and going to go bonkers in a good way because of what advancements in technology are taking place. No one should celebrate losing a job because a robot can now do that job. You can celebrate the fact that technology is expanding. Technology is making our lives easier. Technology is making it possible for a company to profit more in this area, and they may have money now to hire more in this area over here. And if you can make that transition and make it as smoothly as possible, then you celebrate the technology. But the idiocy of saying you should be happy when you lose your job because of automation, my gosh, wake up and join us in the real world. The other comment she made is that capitalism is irredeemable. I'm at 23 and a half minutes. I like this presentation to be 25 minutes or less. I like it to be around 20 minutes. I'm going to save this for tomorrow, but tomorrow I'm going to talk about the irredeemable capitalism that she's referring to, because that is one of the stupidest comments I have ever heard any human being on planet Earth utter, is that capitalism is irredeemable. I got one comment for Alexandria Ocasio-Cortez and anyone who likes her and believes the way and thinks the way she thinks. It is only because of free market capitalism in a democratic republic that you are able to make that kind of a stupid ass comment without fear of being put in jail or being executed. That's the only reason you can make those moronic statements, is because you live in a free market capitalist democratic republic country. sit on that one and stew on that one for a while. I'm going to sign off right there. Sorry, it's on a bitter note, but look forward to visiting with you tomorrow. Thanks, everyone. Bye.